Portfolio management. How do you break it down? How do you define it? What is portfolio management? Portfolio management is the art and science of selecting and overseeing a group of investments that meet the long-term financial objectives and risk tolerance of a client, a company, or an institution, right? Client, company, institution. Portfolio management requires the abilities to weigh strengths and weaknesses, opportunities, and threats. Now, if y'all realize what they just said, they just gave you a breakdown of SWOT, a SWOT analysis, if any of y'all have ever heard of it, right? They talk about that in business. So we're looking at opportunities and threats across a full spectrum of investments. The choices involve trade-offs from debt versus equity to domestic versus international and growth versus safety. Understanding portfolio management, professional licensed portfolio managers, that's not always true, work on behalf of clients while individuals may choose to build and manage their own portfolios. In either case, the portfolio manager's ultimate job is to maximize the investment's expected return with an appropriate level of risk. I want to read that one more time, y'all. The ultimate goal is to maximize the investment's expected return with an appropriate level of risk exposure. All right. Portfolio management may be either passive or active. I'm going to do a show on passive or active, but not today. All right. So passive management is a set it and forget it type thing. Active management involves people trying to beat the performance of the market or index. So when I was an institutional, I was an active manager. Key elements of portfolio management: asset allocation, diversification, rebalancing. Rebalancing. What is rebalancing, folks? Active portfolio management, passive management. So we talked about that already. All right. So this isn't me. This isn't me making these things up. So I always like to present a resource. So when we think about portfolio management, again, you have your objectives. What's your time horizon? Who you're investing for, right? When you talk about a personal, a company, or institution, they all have different goals and objectives. You all have different goals and objectives. So I'm talking to you all today. So we're going to put it in your spectrum, in your sphere. What are you investing for? Are you investing for retirement? Are you investing for your child's college program? Are you just creating a generational wealth fund, right? So it's not expected to be used in your lifetime. It's not for your lifetime. It's for your children's 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 lifetime. All of those generations and lineages linked into that. You could have different funds for that. So with having those different objectives, those different time horizons, you will manage your money differently. So I just said your generational wealth fund, right? What's the time horizon on that? Is that 5 years? Is that 10 years? Is that 100 years? So typically your average, when we're clocking generations, we're talking like mother to son, then mother to grandson, then mother to great grandson or great granddaughter. So those are 4 years. And those usually kind of come in 20-year increments. They're usually kind of judged out in 20-year increments. And so if we're looking at that, right, we're saying, all right, well, we want to do our children's children's children. And so me, if I'm thinking about my children, I have 3 children, I have 1 grandchild. So I have 2 generations to account for already. So that's at least 40 years if we're doing it like that. So I can start buying stocks, let's say for my grandchild and beyond, with a 40-year time horizon. And this is just all, I'm keeping it simple, y'all. I can get way more complex with this and sophisticated, but it doesn't need to be. So let's just say 40 years. So I'm looking at 40-year time horizon. What stock market or what stock investment do you think I could buy over the next 40 years that will do good? If I would have bought Sears or Toys R Us, would that have been good a couple years ago? If I would have brought Tesla, would that be good? I know y'all love Tesla. Remember, this is not investment advice, y'all. Past performance is not an indicator of future results. This show, this platform is all for entertainment and educational purposes only. Don't ever say Kamari recommended an investment or a stock to me, because that's a lie. It's a bold-faced lie.